Happy May Day, everybody. It's the IC Topic Chats. We're here to talk about one of our core topics that we do every single May. And we've been doing it since May. I think we just figured out the core topics in 2021, but we've been talking about different kinds of business structures since the beginning when we started 5 years ago. Core topics, so capitalize it because I don't know, just to grab your attention. It's not like it's an acronym or anything. It's just a session that's repeated every year. And we update it with new information or our better understanding of things each year. This has been one of the topics that I feel like I've been the weakest on over the years, but I think I've got it down and I've got help from others here. I know Kurt is here to correct me when I get it wrong, but I think I've got it finally. But anyway, we're going to talk about why you might want to change your business structure or even understanding the generals of business structures today. So let's dive in. First, I want to say I am not an attorney. In fact, I had a exchange with an attorney this morning and he gave me some advice or something, and I said, this isn't legal advice. I know that. And then he sent me an email back and said, talking about how it's definitely not legal advice and whatever. And I'm like, okay, attorneys. I will tell you, I should be just as careful as he was in his email exchange with me and saying, I'm going to provide just my understanding for things. I'm going to point you in the right direction, but I don't want anybody to take this away as Matt said, this is what I should be doing. And this is legal advice. And then when inevitably you find yourself in a situation, you come back and sue me. So don't do that. Okay. I'm just going to give you just my understanding for what I know for myself. And hopefully this will help you in a conversation with your attorney when you do that. And I do suggest, and I always suggest this, think about having a conversation with a small business attorney. It'll cost you a little bit of money, but hey, they're consultants just like you. And so you should consider paying their fees. The same attorney that I talked to earlier charges $1,725 per hour. And I was like, it's a very special thing, and it's an extremely niche of a niche sort of thing. So he certainly is probably worth that. And so this kind of pushes back on that whole conversation we've had in previous sessions about value. But man, those lawyers, there's some lawyers that are just crazy expensive. I've never heard of a price that high. Anyway, that's a complete aside. Let's get into structure. So the kinds of stuff I want to talk about today are these areas. Most of you, when you first start out, all of us just about when we take our very first contract, we're treated as a sole prop or a sole proprietorship. It's usually just abbreviated to sole prop. You'll hear that a lot. So if you hear that, you know what people are talking about. And I'm going to get into the details of that. Then there are partnerships, which are effectively still sole proprietorships that are just groupings of people that are sole proprietors that have agreed to work together. I'm going to talk a little bit about that. But really, I want to get you to the point of once you feel like you understand enough about sole prop and you want to move beyond it, the different kinds of corporations that are out there, like C Corps, LLCs, S Corps, a B Corp, which is actually not a real corporation. It's just kind of something you elect to do. And then alternate structures, particularly nonprofits, which we know our colleague who's here today, Kurt Stuke, has created a nonprofit. And I've actually created a nonprofit, not for the program evaluation side of things, but for this outgrowth of this this program that we do. And then we could also talk about a wholly different idea of research institutes or centers associated with a larger organization. I did put this nice little quote in here, which I've used and I refer back to from time to time on LegalZoom.com. So business formation, that's kind of a good thing to know. All right, let's jump into sole proprietorship. So when you take your first contract and somebody says, hey, I like you, you're awesome, I want you to do this thing for me, we set up an agreement. Hopefully it's a contract that gets signed, another session. But they pay you money, you take it, you deposit it into a checking account. You have now kind of you've started business. So even if you're babysitting or mowing lawns, in many ways, you're operating like a sole prop or sole proprietorship. They're easy to effectively at some point you're going to create a name for yourself, even if you're doing business as under your own name. You may want to create a name for yourself, and you're going to file a document with the state or the county. Usually it's the county. I'd reach out to your county and just look at what it means to start up a business. It's fairly simple. When I did it, I went down to the county. courthouse, which is literally across the street from where I'm sitting right now. And I completed a document. I think I paid like $30 to post something in a newspaper I've never heard of to make it all official and public. And then after that period of time, they sent me a certificate in the mail saying I'm a business. And actually, I don't have that with me. I had a session yesterday and I talked about the same thing, and I had it with me, and I've kept that. Some of you, depending on where you are, if you're in California, you may need to do this annually. I did it once and I haven't done it since, and I haven't needed to. I have updated the name of my company over the years through the state of Illinois, where I live, and I do have an annual filing for that as well. Anyway, with regards to the sole proprietorship, it's easy to create and terminate. It's cheap, meaning you don't have additional paperwork to do, which is some of the things we're going to talk about in some of the later forms. It's directly under your control. But there is unlimited liability in this situation, meaning you and your business are treated the same as you and your person, meaning if somebody sues your company, they're suing you as a person. And if the company, you did something wrong, they could effectively go after anything that's personal on your end, like your kids' college funds or your retirement. And that's the reason why people move beyond the sole proprietorship at some point, because they understand it and want to limit their liability, which is a phrase you'll hear a lot. There might be tax issues, meaning you might be paying more taxes through the income you're receiving. And that's another reason why people decide to move to a different structure, particularly an S Corp. And this all depends on you, right? You just do what you need to do. The reasons people move from a sole prop to away, like I was saying, was taxes, that liability. There's also, you gain access to credit or capital, perhaps, by setting up a corporate structure. And the other, having a corporate structure creates security and continuity. So you have this idea that this organization exists as an entity separate from yourself. All right, let's get into partnerships. Now, partnerships are actually treated, a general partnership, G partnership. I'm not going to go far into this because every time you talk to a lawyer about this, they say, oh, you don't want to be a partnership. But there are limited liability partnerships, LLP, which are like LLCs. But the general advice for anybody doing the work that we do is you don't want to go into partnerships. They're relationships based. The profits are shared. They are easy to create, just like a sole proprietorship. You may have more resources available, and there's limited red tape. That's because it's like a sole prop. The cons is you have, again, unlimited liability to both you and your firm, just like in the sole proprietorship thing. You need to have a partnership agreement. And in many ways, there's a potential for conflict, because if something goes wrong, then you have to figure out how to break up this marriage, which is a partnership. I would suggest thinking about an LLC and have a multiple member LLC. It becomes a little more easy to operate. It's only as stable as the relationship you have with your partner. So if you set up a partnership with a person, you are this is like creating this is effectively going to be as complicated as a marriage. So just think about it like that for a little bit. My suggestion generally is, if you want to work with somebody, is you guys both set up individual LLCs and you collaborate. Now, perhaps you want to merge it together because you just work so well together and you want to create one entity, and you can still do that as an LLC. But that's the suggestion I've heard from people is, hey, we're great working together. You set up Joe Schmo LLC and I'll set up Matt Feldman LLC, and we'll work collaboratively together. And you can even create, a website saying Joe plus Matt evaluators, and you could operate that way kind of unofficially, and that would work out. Now, it'll be more complicated when they go to pay you, but that's another conversation. An LLC is great because it limits your liability. It creates this whole separate structure, as I was talking before. It has better for max flexibility in how you manage and run your business. You do not have a requirement for a board of directors like you do for an S Corp, which we're going to get into in a little bit. You do have the liability protection. Again, You are now creating a separate entity. That entity can be sued and whatever, and it's all held within that entity that's separate from you and your person. You do have to deal with ongoing filings to stay in compliance, and you'll get taxed once as a I guess the income flows through to your personal income through a Schedule C. Schedule C is a tax document that says how much money you made from your business. All right. The thing that you should understand, and I just pulled this down from the IRS, an individual owner of a single member LLC that operates a trade or business is subject to the tax on net earnings from self-employment in the same manner as a sole proprietorship. So that's just something to understand and discuss with your accountant. At a certain point, the S Corp may be better for tax savings. All right, let's get into the S Corp. Pros, it's preferred for small companies with payrolls. The first thing that you're going to understand is when you set up an S Corp, you become an employee, which is you yourself is separate from you as the business owner. In many ways, you need to separate these things. There is more administration than an LLC. I immediately set up QuickBooks to contain everything within my S Corp, which took a little bit of a learning curve. I now have an office manager who kind of helps me coordinate that, and we regularly check in with an accountant, and we have another accountant that helps us do our taxes, and they both kind of have accounting privileges within the accounting software. There's less management flexibility, meaning you kind of need to coordinate things with your board. You need to have a board of directors. The good news is the board of directors can be family members. So my board of directors is me and my partner in life and in business, who's on the call today. There's a phrase, this phrase applies to LLCs too, that lawyers like to use, piercing the veil. What that means is you're creating a structure that's kind of like a wall, or what they say is a veil that separates you from your business. And you and your business need to operate separately. Some of those things that they know that demonstrates you're operating separately is, number one, you're keeping your business finance and your personal finance separate. Another main thing is you're having regular, like appropriate board meetings. You're having at least one a year, and it's documented and it's filed in just maybe your own files. But I have a little stamp, and we have an official structure for that corporate meeting. We're having corporate meetings, board meetings weekly, but that's because it's kind of management meetings really. But it is for the owners, my partner and I. But the reason people don't want to go to the S corporation is it's just a little bit more work, but it does hypothetically, and this is a conversation with an accountant and a local lawyer, save you money in the way that you do things. One thing that's huge about S corps is that you have business expenses. So if I receive $10,000 from a client and then I have expenses, I have not paid any taxes on that $10,000 when I receive that $10,000. I give it to the company, and then I have expenses for the company. Like I need to go buy a new laptop that costs maybe $2,000. So I'm paying for that laptop with $2,000 out of the original $10,000 that has not been taxed. That's the key here. When you receive money as an individual, as a sole prop, you receive $10,000. You, at the point that you receive that, have a responsibility to pay taxes on it, right? Because it's now come to you as a person, not as your company. So the company isn't paying taxes on that $10,000. The taxes happen when you identify how much you received in profit for the year from through the Schedule C that happens at the end of the year. Now you should be paying on your assumption of what you're going to have at the end of the year on a regular basis, on a quarterly basis. But the beauty part is when people say, well, that's a write-off for you, and they go, well, it's actually not a write-off for me. The write-off conversation is for people who are sole proprietors, right? I don't have a write-off. I just haven't ever paid taxes on it to begin with. So I can't write anything off that I haven't been taxed on. So I know that gets complicated, and we can go into that in the chat. But when I buy a laptop out of business funds, the business hasn't been taxed. All right. How about an LLC that elects to be taxed as an S corp? So it's important to understand that an LLC is quote unquote a legal entity, right? It's primarily focused on limiting your liability. It is not recognized by the IRS in the same way as like a corporation, like an S corp. So that's where LLCs can choose to be taxed as a C corp or an S corp. We haven't gotten into C corps yet, as an S corp by filing a document called an elect. I'm reading this directly from the IRS, by the way. An election with the IRS. Once the filing is done, as far as the IRS is concerned, the LLC is the same as a corporation and it files the same tax forms as a corporation, as a C corp or an S corp. An S corp, by the way, that term S, subchapter S, which is some mundane document that you can find and look up and what all that means, but we just call it an S corp. It's an S corp is generally a smaller corporation and smaller business. And I have a link that I can share afterwards in the chat. I don't know if I can do that right now. Well, let me. Hey, let's try it. There's the chat. That's what I did. All right, let's go into a C corp. It's a very, very rare thing that you're going to see an independent consulting practice set up as a C corp. That being said, last year, DVR Praxis, they joined us, and he was set up as a C corp, and he decided to go that way after being an S corp for a while, and then he was in the process of moving back to an S corp. The C corp is complicated, and the main con is going to be that the C corp annually pays taxes on its profits. The C corp as its own individual entity, and then when you take money out of the C corp as an individual because you own it, you pay taxes again. So this is where you talk about the double taxation. You're getting taxed on both ends. The S corp is easier because you only get taxed on your Schedule C, the amount of money that you take out of the business, and then you share with the federal government at the end of the year. That's what you're getting taxed on. You're getting taxed once in an S corp and twice in a C corp. There's reasons to have a C corp, and it has to do with property, and I don't understand it, even though I've thought about it a lot. The C corp must have a board of directors like the S corp, and there's strict rules about meetings and keeping records. I think it's even more strict than the S corp. You can see the pros here. The corporate is taxed at a lower rate. You have unlimited owners. If you're looking for investors, it's preferred. You can have this huge number of investors, but you're holding your corporate assets very separate from your personal. When we talk about my partner and I, with whom I'm married, in many ways, our company, even though it's its own corporation and it's separate and it's got all the veils and everything, it's really just kind of an extension of who we are when you talk about how it's thought of by the federal government and the IRS. The C corp creates even a thicker wall, and it's particularly good for having investors. Not a lot of people use it in our business, but there's reasons to talk to a lawyer about that. All right, let's talk about B corps. A B corporation is not an IRS recognized corporate structure. Benefit corporations are for-profit companies that may want to consider additional stakeholders, meaning the people that you're serving, in addition to making a profit for their shareholders, meaning you may want to take on, this is like an accreditation where you elect to do certain things and to be reviewed by an organization. It creates, as it says here in the pros, you believe in this thing, you believe in this greater good that you're trying to give back to. You're building trust with your consumers, you're attracting and retaining employees who believe in your mission, and you're living out your mission by electing to be identified as a B Corp. The B Corp recognition happens because there's a third-party entity, which is usually a nonprofit, that will review you on a regular basis. Maybe it's annually, maybe it's biannually, and they look at a number of things. Now, I've never been through this process, so if anybody's here who wants to talk about it in detail, they can. There's additional, I mean, the cons are it costs money to elect to be a B Corp. You get no tax breaks. You have a heightened level of scrutiny by that third party. But, in some ways, it's kind of like a for-profit company wanting to just demonstrate to the world, hey, we're a really great company because we've done this thing. It's kind of like we got this label that says we're great. If we were a food company, we're organic. It's like getting an organic label. This is the same kind of thing for an independent consulting practice. We've elected to be a B Corp, which means we're awesome. And so in many ways, our clients are all doing their best to try and save their part of the world. We're all out trying to save the world, usually, these mission-oriented organizations. And a B Corp is a way to just demonstrate your investment in that approach. All right. Some people choose to be nonprofits, including Kurt, and we'll let him talk about that in our chat function. A nonprofit is, as it says, an organization that does not have profit that gets passed on to its owners. In fact, it's now kind of a public organization as a nonprofit. It has a board that is not your family. It has to be a board of directors that are not related to one another. The board of directors has greater say. You have additional audits and paperwork. If you're, I forget what the number is. Nonprofits are really easy if you make less than $50,000 a year because you just file this one little document. I was the treasurer for our running club, and they generate about $30,000 a year, and it takes all of like 2 minutes to file that tax document because they don't. The federal government doesn't care if you're really, really small. They do care if you're kind of a larger organization. You can't just pay yourself whatever you want. It has to be scheduled. Now, there are nonprofit leaders who make a lot of money, but it's all publicly shared and can be looked up. So that's things to think about. But the pro is you have a social mission. You are not focused on profit. You have a separate legal status. You again have that limited legal liability, and oftentimes nonprofits get funding that our for-profits can't get. I'm recognizing the difficulty of that right now with some of the work that we're doing that has hence become part of our nonprofit. But when it was coming to Goshen as a for-profit, the federal government just doesn't know what to do with us because we're strange. We received a grant that typically goes to nonprofits, but we're going to figure it out. But foundations often want to work with nonprofits. Finally, I want to talk about research institutes or centers. So when I first was setting up Goshen Consulting, actually before I even got to this point, I had this grand idea of starting a research institute at a university because that's where I worked. And that's kind of where I have a degree in higher ed. And I thought, I'm just going to work for a university for the rest of my life. They'll take care of me. It'll be grand to do this sort of thing. I can help contribute back to this institution, which will pay me well enough to make it worth my while to do it. That was the big kind of idea. I took this idea to the university. They had no idea what to do with me. And then I realized this is a bad idea. This is my story. If they don't know what to do with me now, how are they going to be when I'm trying to negotiate raises or contracts or things like that? They were just administratively complicated. So people do have research institutes. A research institute gives you kind of the main con, which is the prestige, I think, is if you're affiliated with this university that's been around for 200 years or longer, and you can put that logo on your card and you can say, I'm Matt Feldman from, Harvard University or some prestigious place. You have instant recognition, right? You don't have to kind of demonstrate the value around what I have to demonstrate value around Goshen Consulting on a regular basis. What is a Goshen, right? People know what the institution is. And so you have that instant recognition of what you are and what you're trying to do. And generally trust, because they might trust, or at least the trust that they would apply towards the institution, because the institution's entrusted you to represent them. So you've got that. Hypothetically, you're getting organizational support too, where they're helping you coordinate contracts. They're supposed to be a partner in all these things. However, I think in many ways, particularly right now, there's more cons. There's overhead in the way of costs. So for every dollar you bring in, there's an overhead rate, facilities administrative rate, or what's called an F&A rate, that you pay back to the institution, or the institution takes off the top. In a lot of places, it's around 50% or higher. So for every dollar you have for direct expenses, there's 50 cents that goes to the institution to pay for your office and your electricity and your internet and other things. And sometimes they don't share any of that back to you. There's a lot more oversight, which means that translate oversight into meetings, lots and lots of meetings. You probably have to report to a dean of research or a vice president for research. They have whatever happens at that institution, particularly if it's a public institution, you might have legislatures from your state saying you can and can't do certain things, and that becomes complicated. It's more expensive to run a research institute because of the overhead piece, and also because you might have just a lot more red tape to get people hired, and the way that you hire people is more complicated. When I want to go hire somebody, I can just hire a person, and we have internal process for it, but it's something that just me and my partner created and put into place, and it makes sense. It's not as complicated as working for a major organization that would make it, you just have to go through so many different offices and approvals and all those things. But a research institute can be great. And I can tell you our centers, I forget the name of the TIG, those folks start up these centers and they immediately are in the 6 figures and even 7 figures in annual contracts. And it's just blown me away. I just started up last year and I have all these contracts. It's probably because they have that prestige or that instant kind of recognition for who they are. All right, I'm going to stop recording here and break this into the chats function. But if you're out there in YouTube land, I'm going to say goodbye to you now, but everybody who's live, stick around.